Okay. And we're recording as well. So I see people piling in here, which is great. Give them 10-15 seconds and we'll get started up here. I'm going to share with you some information that I found really interesting this week, that especially will be interesting in the context of some of the BSA stuff that we're doing and working on. Okay, let me tell you what I'll do. I'll even organize it here. Is that your background noise there, Tom?
I can hear it. I don't me.
Okay, if you would mute, you can hit *6, please. And that'll mute your phone. For
all callers are muted and may unmute themselves by pressing *6.
Great. So if you need to talk there, you can hit *6 to do it. But otherwise, most of these calls we just do chat. So you can chat in the box if you have a question or something you'd like for us to address specifically. So Don, you can still hear me, can't you?
Yes, sure can.
Great. All right. So you and I should be the only open mics right now. Cool. Well, let me jump in and kind of get the call going. One of the things I wanted to share with you is for those of you guys using the BarSmart Repay Smart software, I finally committed a few months ago to start updating the book, which came out in 2007, right as we were hitting the peak of the market there. As some of you guys know, you've read the book. It's called BarSmart Retire Rich. I'm working on a new version that's by the same name of the software. It's called BarSmart Repay Smart, and it's going to be a book about how you learn to borrow smart and how it's also important to learn to repay smart. So we think it's going to be a really nice fit for educating the consumer and whatnot. I'll keep you guys posted. I'm about halfway through editing the old book, and then we'll be adding a whole new third of the book, which will be on repayment strategies, all of which you'll be able to model inside of the BarSmart Repay Smart software. So this will be a really interesting way to engage prospects and consumers, to educate people about what you do and how different you are, and then of course create a real opportunity to differentiate yourself by having people who read the book say, I want to do strategy 6, the debt snowball, tell me how that works. So the book will be a tool that you can use to educate the client. Then they come into you for the actual analytics and information. So pretty excited about it. Goal is to get this out in January. So if all goes well, we'd release this in January. We're going to have a couple formats. We'd have a traditional book format. But we're also looking at a digital ebook format that you'd be able to get out to your clients and prospects in a really nice format that's actually even got some tailoring for you as a provider of the content for them. Maybe has your picture and logo and stuff on the back of the book as a provider. So just some fun stuff I wanted to update you on there. As always, we like to talk about the software from the context of mindset meeting skill set. I'm always asking, how can I help our users profit from our experience? And in two categories: mindset, that's thinking about what you do and how you do it differently, and then technical skill sets. How do I learn to use the tool better? As the tool develops, I can develop, and as I develop, hopefully the tool's going to develop. And that's why we say it's not what the software does, it's what the user does that is so important. The software itself, if you're a first-time joiner, it's really designed to take all the investment you've placed in licensing and CE and marketing and tools and systems and trainings, everything you have to have as table stakes to get and participate in a lead. We found that the biggest area that we can really move the needle for you is in this conversion rate. What can you do at the point of sale that will help you increase that conversion rate on that lead prior to going into a 1003 process or closing? So this is what we think of as our sweet spot. If you spend all this time and energy and never get a lead, you're probably not going to be in the business for very long. If you spend all this time and energy and you generate leads and you don't convert them into an application that can close, aka you don't have an effective sales presentation, you might survive in this business, but you won't thrive. You won't get to producing 20, 40, 80, $100 million a year in production like some of our users have. One of the things we're doing today is we got Don on here, who's a fairly new loan officer in the business, doesn't have the high production levels of some of the prior speakers, but I'm going to try to start balancing a variety of folks that are using the tool, people that are brand new in the industry, and how they're building their practice on BSA from the get-go, people that are experienced. So you get different takes on different levels of experience and understanding and whatnot, because I think it'll all compound in a really, really nice way for you. At the end of the day, we want to increase your conversion rate to this sort of 70% threshold. We're going to talk more about that in the future because we're starting to do a better job, and we're starting to track and try to work on baseline metrics that can help people understand their conversion rates. We did a call earlier, but one of the key critical conversion rate metrics that we use, and I would encourage you guys to track this if you don't now, is every contact you have, a phone call, an email, a referral, someone you meet at a party that says, I'm thinking about refinancing, that's a lead. Track that, mark that down, and say, I had an opportunity with someone. Because if someone at a party says, I'm thinking about refinancing, that is a lead. If you can't get them excited through your audio logo or through your conversation to call you, then that's still a lead. Our goal is to see what percentage of your leads are actually converting into applications and what percentage of your applications are actually closing. And that's a key metric that we're going to be looking at in the industry as a whole. And I'm going to encourage people that are using this platform to start thinking about that in context of what percentage am I able to convert. This particular formula that you guys should be able to recite in your sleep if you've been on several of these calls is based on experience we had over many years working with consumers at one of the largest financial institutions in the U.S., and they found there were 3 critical things that consumers needed to know, and if they were comfortable, they would tend to want to move forward in a transaction. The first one is, do I have the cash now? That is the closing costs or whatever is needed for this transaction, to buy a house, to pay for my closing costs, etc. Secondly, yes, we will be recording this, Wes. It'll be up on our YouTube site a few hours after the event today. If you don't hear audio, you need to make sure you dial in. When you log into the web portion, there's a number at the top there. That's the conference line. Make sure you dial into that for the audio. Can I afford it now? That's cash flow. What's my cash flow like on a monthly basis? Is it going up or down, and am I comfortable with that movement? And the third thing is my financial impact over time. Now, last week we talked about the key evolution of presenting to the consumer, how more and more leads are coming in via the phone and the email, and how much more difficult it is to communicate complicated ideas to a consumer, especially math. 9 out of 5 consumers are really bad with math. Okay, that's a statistical fact. So what we're really focusing on within the software is how do we effectively handle the 3 modalities. If you haven't watched that video, go back and watch it. It was our last recording. It's on YouTube, where we talk about the dynamics of face-to-face versus offline sharing versus online sharing. Because technically, you're going to have different conversion rates for each of those modalities. You may convert a higher rate face-to-face. Some people actually convert a higher rate online than they do face-to-face, depending on the type of business that they're doing. But you want to be prepared to handle referrals and leads in all 3 of these different key areas. Now, before I hop on with Don, I'm going to share this, and then maybe Don can speak to this conceptually as we talk. But one of the things I learned this week in talking with an industry expert that specifically works in this area of CFPB and Dodd-Frank and everything is that right now in the industry, one of the big problems is there's a lot of confusion around what's considered to be pre-qualification or pre-qual education versus an application. There's a publication that came out in 1995 by the FDIC. It's considered the standard of the book for this question. And it says mortgage loan pre-qualifications, application or not. Now what they have under Reg B and Reg C is a 7-point test. It says if you collect the client's name, the property value, their income, a property address, any credit status, that could be you have good credit or bad. It doesn't have to mean a credit. You don't have to pull an in-file. If the client says I have a 650 or I have bad credit, that's credit status. You now know. Employment history, and any general mortgage related information. Under this 7-point test, if you collect 6 of these 7 items, you technically have a full application and are required to do all related disclosures. But they said if you don't collect at least 6 of these 7 items, it's considered a pre-qualification education, and that you can educate a client and you can talk to them under the context of pre-qualifying to consider financing until you're blue in the face without triggering a specific need to disclose. Now the problem with this is you can see this right in the list, right? Number 7 is the killer, because what happens is anytime you talk to a client, if you collect general mortgage related information, you've triggered an application. Whether you're doing it or not, the guideline says that you've triggered an application for this client and you need to be doing all the other related work. So here's what I found out, which is really cool, especially as it relates to BSA. Under the 7-point test, it's becoming the 6-point test on January 23rd of 2013. Charles, you just need to dial in. There should be a number at the top there when you log into the web portion, and you'll see a number there that you can use to dial in for the audio portion. And of course, we're recording this. If you miss anything at the beginning, it will be on the YouTube site. So on January 23rd, it becomes a 6-point test, and what they're doing is they are eliminating number 7 and saying that they're taking that away. There is no longer an other general mortgage related information because it's too general. And they're saying the original 6 will stand. If you collect those 6 items, you have triggered an application. But if you don't collect these 6 items, it falls under the pre-qualification education statutes of the FDIC guidelines of 1995. Meaning that if you collect the client's name, property value, income, property address, and credit status, but you don't get their employment history, you don't have an application. If you collected 1, 2, 4, 5, and 6, but don't collect their income, you don't have an application. In BSA right now, we collect the client's name, we collect property value, we collect income, and you typically might collect address even though it's not required. We typically don't collect credit status, and we don't even have a field for employment history. So technically, what I think is going to happen here is BSA can evolve to a tool for you that by following it and using it in your conversation, all of your conversations within BSA fall into the pre-qualification education statutes, and you wouldn't have to go in and do good faith, truth in lending, and all the other documentation unless you were going into a full application, which could be a huge time saver for you, and consider it for your company that's having to do all of these disclosures. So this is pretty exciting stuff, and it falls right into line with what we've been told, which is the CFPB, the Dodd-Frank, these other groups, the SEC now, which is formally filing all kinds of lawsuits across the U.S. for mortgage bankers because they feel like it's under their jurisdiction under the mortgage banking and securitization laws, is that they're leaning towards anything that you do in best effort to educate or help a consumer better understand their choices is falling into the category of very loose, open, okay. Anything that's really enhancing the company, it's specific to compliance, specific to a disclosure you should have made or whatever, is going to be very, very strictly sort of looked at and scrutinized. So the goal here is you want as much of your business to be in the front end, pre-qual education as you can be, so that you're not getting into that heavy-duty sort of other requirements unless you have to be. Because we all know a lot of our prospects, a lot of our suspects simply aren't good candidates, or they need to be sold. They need to understand that this makes sense for them before you jump into that. That can help to free up time, energy, and increase your revenue in a very meaningful way. So what I want to do today, the tool itself, it's fast, easy, accurate, clarity, confidence, leads to quick action, all that kind of good stuff. You guys have probably heard that. If not, you'll hear it in the other videos. I want to kind of move on today because I know Don's got a limited time frame. Just a quick update, the dynamic reports are done, video integration's done, new open house flyers, that stuff is all stuff we rolled out in our last call, getting phenomenal feedback from people that are getting feedback from their clients saying, I can't believe this, it was so cool, we understood it, we watched it, let's move forward. Love to hear it. Please share some of your success stories. We're working on the Action Trigger report card. That's one of our next releases. What that is when you have a client who goes to your site and views your plan or your video or takes a look at the presentation you made for them, it'll provide you a report card of their activities, so you kind of know when to engage with them and what it is that they did, so that it'll give you some additional intelligence. And that will evolve over time. Initially, it'll be very simple. Over time, you'll get more and more feedback. We're working on dynamic plan interaction now. That means once you create a plan and publish it for the client, they'll be able to interact with your plan and adjust the sliders and see what would different things do to their plan. The hot syncing is part of a beta we're doing with a couple of clients with Encompass and Calyx, but that's in beta. You'll learn more about that later on. And we're also working on a BorrowSmart widget, which would be something you could put on a website or in different locations on your web or as a standalone page, where clients could come, learn a little bit, interact, put some information in, and it would sync into your BSA in a really, really cool way. So a lot of cool stuff happening here. We talked last week about the best practice presentation solutions, but what I wanted to do today with our guest, Don Chase, is take someone who's fairly, and you can tell us whatever you want to share, Don, about your experience, how long you've been in the industry and stuff. But you know, what I thought was interesting is you're somewhat newer in the business than some of our other speakers. BSA is becoming an important part of the way you do your business. So I wanted to kind of get a feel for, maybe you could share a little bit about, you know, your background, how you got in the lending industry, how long you've been in the industry, and then how are you using BSA right now to differentiate yourself. And then I think you may have a case study that we could actually take a look at, that someone you've worked with recently.
Sure. I got to tell you, Todd, we didn't get a chance to talk before. I am so old that I just tell people I've been in this industry through 5 recessions. And my wife thinks I've been functionally unemployed since about 2008. But I'm rebuilding my business, joined BorrowSmart, or started using BorrowSmart on every client starting in March, and have actually put in as much time as I can on the training videos and getting current with it. What I'm finding happen, or what I'm seeing happen, is, and I'm a training call away from the live video stuff. I am actually just sending out PDFs and then calling them up. I have the PDF on one screen, so I know exactly what page I'm going through with them, but I keep the BorrowSmart Live on the other screen, and then can make effects as we talk. But I just talk my borrowers through the PDF, actually. And
cool. So your default kind of, because we always talk about this in these calls, how are different people using it? Your sort of go-to right now is basically create the PDF, send that out to the client, and then just basically bring it up on the screen and talk them through it. You're not even, are you doing desktop share and sharing it live, or are you just kind of talking through it over the phone?
I've baited it once, but I haven't done it seriously yet with my clients. I'm, I think, a couple scripts away from doing that.
Great. And we're using that now. Most of you guys, you know, if you've been on these calls before, you know the desktop sharing is built into the software. We'll go over that in our demo in a little bit later. But we're using it right now for this call with all the folks that are on here on a national basis. So you can use it one-to-one or as a group or just with a client across town to share your stuff. But so in your case, you send them a PDF, they look at it, you talk them through. When you're taking someone through a PDF like that, and we can talk about what your ideal presentation is, because we've gotten so many different versions of what people like to present. What are the highlights for you that you find the clients really respond to?
I present a really conservative plan. I'm guessing 0 appreciation and 0 return on investments. So the numbers they're looking at are strictly the performance of repayment on a known basis, and I do the bottom of the borrow screen for a term of. Are you sharing my desktop? I don't.
I'm not yet. No, I'm just sharing the screen, my screen right now. But we'll share the desktop out in a minute.
Whatever. So my borrow page ends with a 3 to 5 year wealth comparison, and then I do the repay screen with a life of the loan presentation. And so they see both ends of it. They see how quickly the refinance will make money for them, and then they see how it's going to perform over the life of the loan. And I know my clients well enough that I verbally detail when their kids are going to be college age on the loan repayment chart, that kind of thing, so that they know how this thing's going to really fit on their life. That's
cool. You know, you just reminded me of something else that I wanted to point out on the CFPB. they're working on what's called the SID, the Single Information Disclosure, which will consolidate the APR and change the way that's calculated. One of the new things is the old TILA and APR stuff was all based over 30 years. They're changing that now, and it's going to default to 5 years, which again is really interesting. But they said that the average consumer is out of the transaction within 5 years. Over 80% of the financeable population is no longer in that same mortgage. So under the new SID disclosure, it will actually show your 5-year time horizon. So how much money did you pay, your closing costs, how much interest, how many payments and stuff did you actually make over 5 years? And that's pretty cool, because obviously you can compare a 5-year time with all these options, your current and your future financing, and that'll tie right into the new SID disclosures. But it makes sense, right? I mean, most people aren't going to be sitting there in that house, for 30 years. But you give them both. You show them the 3 to 5 year time frame, and then you also give them sort of the big picture.
That's right. And the details that I do collect on the front end are enough to fill in the actual data needed for the manage screen on their current, if it's a refinance or rental situation. But especially if it's on a refinance, I get all of the data that you need to fill in that manage screen on their existing loan. So I get their current balance, their first payment date, that kind of stuff. I definitely guess as to their credit score, so I'm not credit sensitive on my quotes, and don't have employment data in here.
Okay.
So I'll survive the application test.
The application test. And that's just nice to know. I mean, if every person you're talking to, you're worried I'm going to create a full disclosure package that's going to have to go out, even though I only talked to them on the phone for 15 minutes about their options. This is a way to document that. And it's going to be important for you in the future as audits and those kinds of things happen, to be able to say, look, these applications were taken and disclosed, these pre-qualifications happened and didn't go forward. But you can see here, I'm not triggering an application. I've only done these particular things with that particular client.
Yeah.
Well, let's go over and take a look at your software. I'll bring up. I'm going to stop sharing here for a second, and I want to click on you, Don. It'll probably pop up a box there that says
share.
And then click the share your desktop, and we should be able to see your screen.
Yep. Okay.
Hey man, wow, technology. Cool. All right, so maybe kind of take us through a little scenario that you've done recently, and how would you set it up, and what would that look like?
These are some friends of mine that have all their kids are out of the house. They're done paying live for school debt, but they've got some of their kids' school debt still traipsing around in the form of consumer debt. They're underwater value-wise, and so before we even started this work, I told him to get a 401k loan and consolidate some of his debt onto that, because there wasn't any way I was going to be able to deal with it. And what we hope to do is change his life mortgage payment-wise enough to make this refinance effective. And it's going to be pretty easy to do, because we're going from 4 7/8. He is Fannie Mae Refi Plus eligible, and my scenario presents what his options are. And
cool. So basically, at this point, he's got a first mortgage, and he's got 2 credit cards and a 401k loan. That's where he's at today. And then you go to the next tab and you set up some options for him.
Right. And we've actually boiled those down already to the most. I think I've only got one open. Kind of the best pricing the other day was at 3 3/4. So he's going a full 1 1/8% down, and that'll make it pretty easy, I think.
And you got all the other liabilities are staying, so he can see there that he's got a new mortgage payment and keeping his old debts. But I can already see he's dropping from 3507 down to 3132, so that's the right direction.
Right. Yeah, and then it goes
closing costs.
Yeah, it was a true almost no cost deal. And we can adjust that if he wants to borrow a little more borrow a little less and bring in a payment. We could change that for him. But the timeline down here was a 3-year, easy 3-year profit.
Yeah, that's not bad for a tax-free profit.
And then on the replay screen. Chances of anybody having, like you saying, chances of anybody having a 30-year loan are slim to none. I'm encouraging him to at least do a bi-monthly pay schedule, because he's a municipal employee and that's how he's paid, so he might as well do that.
Mm-hmm.
And that'll give him a max 22-year term, certainly pay off his revolving debt inside the 8 years saved.
That's cool, and save him almost $50,000 over that time period.
Yeah, and that's with no appreciation at all, which we know is bogus. And if I had him on the phone, I'd play the sliders. But this makes it really easy. And then every time I update the analysis with him, I just shoot him a new one with a new note on how that affects it.
Hey, that's a good question. When you're typically talking to a client and you're updating an analysis, what areas do you find they typically like to ask you about, and what do you find yourself sort of playing with?
It's the three basics. Can they afford it now? And so cash to close, the cash flow analysis, the cash flow impact, and what it's going to do over some period of time in the future. Depends on the age of their kids.
Wow, so it really works, huh?
Yeah, it really does. And I got to tell you that my business is really on an upswing this last couple of weeks, and I really think it's because I've just gotten mechanical about sending this stuff out. And I don't send fee worksheets until I'm, or loan data until I really am in a loan application scenario and am telling them real numbers, locked numbers or whatever. Everything else prior to that is borrower smart.
That's really cool. So you're doing something that I hear people telling me they're doing quite a bit, and that is they're kind of throttling around a short-term time period, like a 3 or 5 year time period, and then they're going over and showing that longer 30 years. So you're really saying, look, in this case, if you're out 3 years, I can save you about 12 grand. But if you go out 30 years, you could be paid off. You could save over $50,000 in this example. So it's going to be somewhere between $12,000 and $50,000 that you're going to save, which is a nice way to position it.
Just based on the performance of the loan, regardless of what the economy does.
That's very cool. Hey, I want to ask, as we're going through this, if you have any questions, just chat them right in the box for Don, and I'll ask him as he's looking at these. Okay, do you have another one you want to look at?
Yeah,
okay, great.
A couple if you want. I've only got a couple minutes, a few minutes that I can take.
Yeah.
But this guy, this family is on the upper end or the other end of the income deal, but their kids are younger, and they've managed to pile up some consumer debt. They adopted a kid a couple of years ago, and so they've got all kinds of consumer debt, but they don't have the value to pull this off, and so at least a full consolidation. So with these guys, I am presenting their options dependent upon appraisal value. And I'm just telling them they're going to have to gamble $500 and buy an appraisal, and we'll see what we can do. But the first option is just a hard change of the existing financing with leaving all their consumer debt intact. The second one would be to take their loan to 417 if we had a value that will allow that, and I think we will. That's the one I think will actually happen. And that'll free up about 22 grand worth of consumer debt payoff. And then the third one is pipe dream. If we had that kind of value, we could do a conforming jumbo and wipe out all their debt. So it looks the nicest in terms of payments, and basically motivates them to step ahead with the deal. They're going to overcome this by probably upping the loan amount. And right now I think the payments are set for, the minimums. So obviously, and they need an emergency fund. So what my idea on a consolidation is to consolidate as much as we can and then dedicate at least 50% of their after payment cash flow to emergency fund, if not more. And then when they've got a year or two of 6 months or more of saved income, then they can kill the rest of their debt pretty easily.
Well, that's fantastic. And when you're going through this, with a client, do you find that they're able to follow your logic and see the options? And do you typically leave it with 4 like this, or will you start with 4 and then as options sort of disappear, because of value do you continue to sort of whittle it down to the one recommendation?
Exactly. Yeah, I just knock off the stuff we can't do and show them what we can do and how that's going to work, what that's going to mean to them.
That's very cool.
Yeah, and again, you know, I drive my manager crazy because I'm not using appreciation or investment return, but it creates a trust factor with my clients. It's pretty darn cool. I continue to get calls from these people.
And do you? I noticed that someone just asked about the emergency fund. Do you actually illustrate that? Will you show that in there as a side fund accumulating for the client?
If I had them live, I would do that because then we can play with that and make sense of it. But when I'm showing these, all of these variables are appraisal dependent, so I don't want them to get too committed to the outcome yet.
And I guess you could always, once you knew what that was, you could whittle it down to one and then go into more detail on the one scenario.
You bet. Copy it and do the second one maybe with the savings.
That's great, and then you can show them, here's that extra money going into the emergency fund, and then, okay, very cool.
Right.
Any other questions for Don that stand out to you guys? I mean, I like the way you're flowing through it, and the fact that you're kind of giving them the options and whittling down and using the PDF. I'll be really excited to see how you engage with the video part of it, because I think you'll find that to be pretty fun.
Yeah.
Let's see. Steve asked, what would it be a best practice to send out a sample plan to agents, financial planners? Absolutely, Steve. If you look at some of our prior videos, there's one with Kent Coppin, who was building his practice with financial planners. I don't think he's on the call today. And I think we've done a couple of different interviews on the YouTube video series with people. And what they were doing is creating a base case PDF showing a typical financial planning referral from an advisor and how they worked with it, and then having that nice presentation. They were taking it into the advisors, especially CPAs' offices, and saying, here's some examples of some recent plans that I've done for clients. Just change the name or call it a sample plan. I think the one with Kent, we actually took his language from his email and a sample plan that he had created, and we shared that as a PDF so you could see. He was a formal Merrill Lynch advisor, so he had built a nice couple of high net worth presentations showing how he was freeing up cash flow for savings and whatnot. Yeah, Joe Arroyo as well was doing that sort of as a financial planner. He does a lot of teaching of the Dave Ramsey stuff and has a radio show, and he was doing the same thing, he created a default presentation and took it into real estate offices for purchases and was educating realtors on how he was explaining to client the value of the closing costs and the rent versus own, and really using it as an education piece, again, to really differentiate himself in the markets that he was calling on. Kent Coppin, K-O-P-E-N, was his last name. Well, Don, I know you've actually got to run to a loan application right now. Really appreciate you spending a little time with us and sharing a couple of case studies. I'm going to hopefully go through a few more here with those on the call, and again, continue to let us know how to make this how to make this better for you.
It's really working for me, Todd. I appreciate it.
Awesome.
Thanks.
Awesome. Thanks, Don.
Ciao.
Ciao. Let's see. All right. So I'm going to come back on here, share my desktop back. So hopefully you may have picked up an idea or two as we were going through Don's approach. One of the things, I'm going to bring up my software and show you a couple of new things that you might not be aware of right now in the software. Let's see. Actually, let me make sure I have my version loaded. All right. Here we go. One little thing that we have done is a couple folks had asked about. Sometimes we auto refreshed payment, but there's sometimes you'll change something and people weren't sure if the payment had changed. They couldn't remember what it was. Maybe you changed this from 4 to 3.75, and you're like, "Ooh, did that change?" You'll notice it refreshed automatically when I change a variable. These are changing, but we went ahead and put a refresh icon here. So for those nervous Nellies who are wondering, wait a minute, did that really change? You can hit the refresh button and it'll make sure it's refreshed for you and you know that you've got the right payment in here. Maybe you find out this is 208 and you can't quite remember if that was the right or not. That's okay. Now it's going to give you that little ability to check that out. Second thing that we've done, we've got a bunch of little things, but this was one that one of you guys requested a couple of weeks ago. We finally got it in there. So you'll notice now on any of the ARM boxes, when you click on the ARM boxes, you know, it preloads all your defaults, but sometimes you're not sure what the index is. So now we have live interest rate pricing in here for all of the different indexes. So when you click ARM, you can come down and say, I'm using an 11th district cost of funds, and it says based on the index, and I just go over here and look at the cost of funds 1.069. I can see that's gone down today. So I put in 1.069, and I've got my live current index right there and available. If you said, nope, I'm doing a 12-month, or I'm going to use a 1-year LIBOR, then I just look over here on the right, US dollar 1-month LIBOR, and that's 1-year LIBOR, sorry. 12-month LIBOR is 0.957. So this will be easy for you to go in there whenever you want to update those. They're right here for you. You can actually, if you slide it over a little bit, you can see how much they've gone up or down as a percent. But I think for most of you, what people were asking for was a real simple way to not have to do this. So just put in your defaults in your default section, and you're always going to have those here. Then when you open up for your particular thing, if you were doing a 5-year ARM interest only, open it up and it'll have all of your defaults. I don't have my defaults in for my interest only ARM, sorry about that. But bring it up for your thing, and you can say, up for this particular lender, the life floor is 4, the margin is 2.5 for this quote, and I need to see if I need to update this. Nope, I'm good to go. And you click your save button, and you've got all your ARM stuff is all ready for you there on each of the ARM products that you're going to do. Sorry, load your detail ARM. How do you get it to load your default ARM details? Okay, great question, very easy. Click on My Account right here. And under My Account, it says Branding, Defaults, and Billing. So I click on Defaults, and these are all of your defaults. So if you check this box, then that loan will show up as an option for you when you're doing presentations. If you have a loan that you never use, like I never use the 1-year fixed ARM anymore, or the 1-month fixed ARM, I can click that and it will no longer show up for me as an option. If I have a 3-year ARM or 5-year ARM, right next to that, here's a little widget box. This is where you come in and put in all your ARM details. So you put them all in here and you save them, and then that will actually, anytime you run a program with a 5-year ARM, it's going to pull all those defaults in there for you. So you can do that for any of these products where you see one of these boxes. You can load any associated ARM details. You'll notice, obviously, beside a 30-year fix, those kinds of things, there isn't a box. But beside like an equity line of credit, maybe you do equity lines of credit with your local bank, and you can come in here again and say equity line of credit adjusts after 1 month. It adjusts 1%. It can adjust every 1 month. You know, you can go through again and just set that up however it is that you want to set it up, and then click your save button. And that way, once you save all, and make sure you do this because people ask about this. Once you put them in there and save them, click Save All Changes down here. I even recommend that as you're going through and doing it, just on each one, your 5-year ARM or whatever, you can save them there, but still go ahead and save all changes here before you jump back over. That'll make sure you got everything locked in. Then when you go back to your presentation page and you're adding an ARM product or whatever, it's going to preload all of those defaults for you. So if this was equity line of credit now, you'll notice it has the 3 defaults I put in there: 1 month, 1%, and 1 month. So that's going to always be there for me going forward, and I'll never have to go back to my defaults if I set them all up, because I can just go through and tweak and adjust them here when I'm creating my actual plan for the client. Let's see, we've done a couple other little tweaks on the HTML, the report pages, the graphs, some scaling. One of the things we hope to have out for you next week that I think it was a Jack Kinsey request, is if the client has a current ARM now, so maybe today they have a 5-year ARM, and you're presenting to them a new option that maybe is a new 5-year ARM. On the present page, if you select ARM details, it'll show you a graph and a chart with their current ARM and its adjustments going forward, and then you'll have a graph and a chart with the new ARM and its adjustments going forward. So instead of just showing the new stuff, we'll show the old and the new for that client presentation. So Angie, I don't know if you're on this call, but I'm noticing that some of the sample plans that I'd had come in this week that I transferred over are not showing up here for me that I was going to go through today. Some of those ones I sent you from JT. Can you check and see if you can resend those to me? And if not, we'll just go through and do a couple of sample ones here. I'll go through and do one for, this was for an employee we have, but we were looking at, for her, renting versus owning. So I'm just going to go through and I'll take you through a sample case here while Angie sees if she can get me a few of those other cases, and again show you the new functionality and the way this thing is really flowing. So if this is a rent versus purchase, all I do is click create a new client plan, and I put in the type of plan that it is, in this case rent versus purchase. Contract price was around $179. Now let me show you, some of you guys are familiar with the mobile tools and the mobile application. Everyone with our software has a fully integrated mobile app that you can use with your clients. And I had someone the other day tell me that that they were using one of the calculators a lot with clients as a first conversation. Well, you can access this mobile app that you have that you can give to clients and referral partners and stuff by clicking this link right here. So when I click this link, you'll notice it's actually opening my mobile app in a Windows web browser. And one of the calculators that people really love is our patented purchase calculator. We built what we call an unculator, which is a reverse calculator. And what I mean by an unculator is I don't have to know 10, 15 different fields to make this work. Realtors really love this, so if you're not sending this out to realtors, you're missing out. All you're doing is saying to a client, what can you handle on a monthly basis? What are you comfortable with? And what do you think you could put down as a down payment? And you click Run Simulation, and this will go through and figure out your target purchase price. How cool is that? So it's going through and coming up as close as it can to $1,250, in this case $1,253. So it's pulling in loan amount, it's calculating principal and interest, property taxes, homeowners insurance, mortgage insurance for the down payment amount. It's estimating as best as it can what it would be for this client as a payment, and it's looking at the down payment and solving for purchase price. So what I found out was someone was using this when they sat down with the client. They were just simply saying, what do you think? And the client's like, well, we could handle $2,000 a month, and we have about $50,000 to put down. So the first thing they did was they were using the mobile app and saying, okay, at around $2,000 a month as a benchmark, and with $50,000 down, we're probably looking at a house around $355,000. So then they were beginning their presentation for the client with a new purchase and a contract price they were putting in $355,000. So it gave them a very cool starting point that was very simple, and then of course it gives them a great story. Here's a tool I use with my clients, Mr. and Mrs. Realtor. Here's something you can use too. And to get that out to your realtors, just click the Invite New User button and send it to them. And when they put this on their phone, this is what they're going to see: your picture, your logo, and all this information with all of these cool tools. But you may find some of these tools are really helpful for you as you are looking to, say, help someone with a purchase, a transaction. So we're looking at maybe engaging this calculator and putting it over on BSA. Since people are using it, we'll add it into our calculator tools here, and you can use that when you're sitting down with a client next time they're buying a house. But let's look at Allison. So we did that with Allison, and she said $179 was what it came up with based on her little down payment and monthly payment. So we just kind of went through and said, what are you paying now in rent? About $1,000 a month. Let's see if it makes more sense to buy than renting. All right, and I go through to the Borrow tab, and you'll notice it has my rent, my landlord, and $10.30 a month. Why the extra 30? Well, I can see what that's for. $30 a month for rental insurance, and an annual estimate going up about 2.5% a year. We only looked at one option, FHA, which was really the thing for that scenario based on a very small $5,000 down payment. And you can see here we've got $179 property value, $179 contract price. The loan amount LTV is 100.1%. And that's because when you start out, you're going to put in 96.5 because that's going to be your FHA loan amount. And then when I go into the payment box here, I can add to that, you know, origination fees, closing costs, FHA, MIP funding fees, things like that. And as I do that, that's going on top of that loan amount. So the true LTV is 100.1, even though technically it's 96.5. But just start out, and we've got videos on this, but just start out with 96.5, put in your loan amount, and it'll calculate that for you. And then go to your widget box here and set up their closing costs and see which of those do you want to roll in. So in doing that, it's pretty cool. We got about $213, not a lot of money coming out of pocket because we put in a seller credit here. And the monthly payment, you could see, well, gosh, when I see this, because remember our 3 criteria are out of pocket, because if you can't get beyond this, then the rest of it doesn't matter, right? The first question is, do I have the cash for this to make sense now? Yeah, I can put you in the house with really almost no out of pocket. Okay, can I afford the monthly payment? Well, you're spending $1,000 a month now. You're going to spend $1,258 after tax, $1,077. That's an extra $77 a month. It's red. Okay, but look at the difference here. With rent, I'm paying $1,000 a month. Look at this number here, principal. I learned this from John Thompson. He was doing this with every client. He was saying, look, you're paying $1,258, but you got $282 a month you're paying back to yourself in the form of principal each month. So really, you're actually lower on a monthly basis because this $1,000 goes out the door. This $1,258 goes out the door, but $282 is getting parked right there in principal for you every month. If you add the tax benefits in, you're not paying $1,000 a month. You're paying $1,077 after tax minus $282 that you're paying yourself in principal. You're really spending about $800 a month. And that was a great learning for me because that's a way that he's really helping people that are renting to understand how much less owning this house might be for them. And then, of course, if we go with Jack's philosophy of property appreciation at 0 and after-tax savings rate at 0, and just look at whatever your time frame is, if we go with the 5 years like the CFPB is going to be using, this tells me that over the next 5 years, she's going to spend out of pocket $66,676. If she buys the house and we compare apples to apples, she'll spend the same amount each month, because this is what we do, right? If you take our approach to fixed payments, we're going to make sure that we're showing the exact same expense each month going to either of these two scenarios. The rent's less than the house payment, so that goes in her checking account. We've accounted for that right here. $87.82 is in her checking account. So we're accounting for that. She spent $75,458 in rent, but she's got $87.82 in her checking account because her payment for rent was $1,000. She's still net out of pocket $66. Over here, she spent $75,458, but she's got what? She's got a house worth $179 and a mortgage that's only $167.27 as a balance after 5 years. That means she's got equity in the house of $18,273, plus she's got $10,000 in tax savings. So we're netting all this out and showing the difference. This is what Don was saying. He goes right to that bottom line there to say you're better off by $20,173 after 5 years, in this case, buying this house with an FHA loan versus renting today. And I can take that with 2 clicks over to 3 years. It's worth 10 grand over 3 years. There's no appreciation, no tax savings. But however you want to set this page up, the way this is designed, your Manage page is where you set up your scenario, very simple. The Borrow tab is where you do your analytics. And the Present tab is where you create your client presentation. So Don was saying he's always done the PDF. So I can sit here and say, all right, I want a cover. I want the introduction. And remember, you just mouse over, click on your preview, and you can see what that's going to look like. I want a cover and introduction. I want a 5-page presentation for the client. Don't want a loan program matrix. Don't want the client data. Don't want the EM tables. This is a first-time home buyer. I want to keep this simple, just maybe 5-6 pages. They are buying a house. So I click that. I want to preview that. Yeah, I want to include the buying a house part with my presentation. And now I've decided this is what I'm going to build for this client. And I launch my presentation wizard. And that brings up the presentation wizard. It's going to have your logo, your picture. It's a web presentation for Allison. Here's all the information, the introduction, current liabilities, transaction costs, showing her option, cash flow each month, financial impact. Notice 3 years. So it's building the presentation based on my last interaction with the software. Proposed liabilities, and here's my buying a house content. That's my presentation to Allison. Now if I'm like Don, I click download as a PDF, and it downloads this as a PDF to me, and I can send this directly to Allison. If I want to share the screen like we're doing right now, I can click live screen share, share my screen out, and she and I can go through this right over the web and talk about it and see what makes sense to her. The third option is publish. This is the part Don said he hasn't done yet, but it's so simple. I click the publish button, and it says, would you like to add video? If you say yes, it pulls up a box. You record your video of the whole screen, and you paste it in, and it does it automatically for you, and you build a live website for your client with your recorded video. Explain to them what it is that you're going to do for them. It's pretty darn cool, if I do say so myself. It's really, really fascinating. I've done quite a few of these just for friends and stuff who've asked me questions. I've taken their stuff, put it in real quickly, sent them a video, and they simply can't believe that they could get that kind of response that quickly, because you can, in a few minutes, build your client presentation and send that link out for them to watch and view. All right, so let me check in, because I wanted to take you through just again. It's a real simple sample. If you think of this as like a preview. If I said, you know, actually I meant to do this 5 years, just close your preview out, come back over to your bar tab, and say, you know, I want to look at this over 7 years instead. That's going to save $31,000. That's the only thing I want to change. I just come back to the present tab, and remember, you build your default. It's going to always remember your default. And so you can save whatever your default plan is, and then you know for that client what you may want to put together for them. I like the cover, the intro, the 5-page plan of the buying a house, and then I click Presentation Wizard, and now I've got a whole new presentation for her, and all of that information now, as you'll notice, is going to be focused on a 7-year time frame. So we've got all dynamic disclosures now. So if you happen to do an ARM on any of these, you're going to see all the ARM language, and the new language with the dynamic APRs and stuff will show up below. That's all been updated and added. And I'm going to go over and look at some of your questions here, see if I missed any. Did I see that the client information can be saved as a family 3.2 and uploaded to Encompass? Yeah, so I'm on the presentation page here. If I've done the presentation, or if I'm just at a point where I want to send this out to an LOS, down here it says export plan to Fannie Mae 3.2, and that'll export the plan to your desktop so you can load it in. I found a lot of people find that there's so little information in here that they actually port over, that they just would rather type it in. Once they've got an application, they go into their 1003, their assistant does it, but you can export it to your desktop and then import it right into Encompass. Or any other program that you use. Thanks, Peter. How do I download the mobile app to my phone? It's not showing up in the App Store if I search for BarSmart. It's not an App Store app because, well, for one, if you go into the App Store process, it takes months, and you have to have certain things built for the App Store that we didn't want to build. We wanted this to work on the web. We've got a real estate company right now, 300 Coldwell Banker agents, that want this application on their website. And so the loan officer that brought this deal in said, hey, how do I do this? Because this is a web application, we're going to create a widget for that loan officer. I'm sorry, I clicked the wrong site. We're going to create a widget for the mobile app here, so that there's code here that would allow a real estate firm or whatever to frame your website right on their web page. So it would have your picture and information, it would have your calculators and rates and stuff, and they could put it right on their website. So that gives him daily exposure to 300 Coldwell Banker agents, which is pretty cool. And what they wanted was a pre-qual qualification calculator and rates. So we built this as a web application so we could do all kinds of other things with it. So to get this on your phone, just click Invite New User, and this pops up all the information, and send this to yourself, and you follow the instructions. For an iPhone, it's super simple. You put in this link, and this will be your link, whatever your link is. Navigate to your link, click the plus icon, and it'll put a BarSmart icon on your phone, right on your home screen, and you can click that anytime you want to load the dynamic application. Is it Apple app or app? Okay, Yeah, it works for Droid, BlackBerry, and Apple. So this will automatically reframe and resize for each phone based on the phone type. So this is, think about it. You may have 300 customers in your database. Click Invite New Customer. You can edit this or use it just like we created for you. Put it into your Outlook or your program and blast this out to 300 customers. Okay? Every time that customer goes and clicks on that app and sticks this on their phone, they now have you, your picture, your information, your rates, all of your triggers and stuff like that. And anytime they do something, I know this wasn't going to be a call on the app, but it's fun to talk about. We have 6 different action triggers on this phone app. So if your clients are in here and they see your rates, or they see they set any of these things up like a cash flow alert, this is something your client can set. I have a loan balance of $280. My current payment is $21.35. If you can save me $100 a month, contact me. Okay, that just created an action alert, and it will go through and email you immediately to let you know that your client has set up an action alert. It will watch for the opportunity, and the second the opportunity triggers, it will email you and your client and say it's time for you guys to talk. We're pulling in sort of national average interest rates here from Bankrate on these things, so you can go through and you can update them yourself. So if you want your current personal rates in here, that's right here on your defaults page. If these are blank, we pull in national averages from Bankrate. If they are filled in, then we'll use your rate. So let me change this to 3.375. So if I want to put in 3.375 in that one field and click Save, okay, then what just happened over here on the mobile app that all of your clients get is, if I click on rates, 30-year fixed, 3.375. So you can just put in the few rates that you want to highlight for products that you want to show, and we'll pull in the Bankrate rates for the rest of the stuff for you here. And we only show products on your phone that you have checked. So if you don't do a 1040 IO arm or a 740 or a 540, you don't do margin loans, you don't do HELOCs, you go through and just uncheck any products that you don't typically offer. And when you do that, same thing, it automatically updates your phone, and all of those products, let me hit refresh here, boom, all of those products on the phone are gone. You're only going to see products that you're actively doing for the client. So you might have 5 products on here, 8 products, and that's all you want to show. That's cool, and you can put your rates in when you have time, and if you don't worry. You're going to be we actually pad the national averages by a quarter so that the rates themselves are very, we'll call it very loose, and they're really there for more of a benchmark or a guide. And if you really want, I really want tight, crisp rates, then come in here and just update these once a week or every 2 weeks for yourself, and put in a couple of rates that you think are good numbers that you want to have out to your clients. And again, I'll come over here and hit refresh, and on their phone, if they check, they're going to see 2.75, they'll see the APR, and they can set up. Every one of these things are trigger alerts, rate alerts, cash flow alerts. If they run a simulation for refi, they run a purchase simulation, you immediately get notified via email. So you're getting a constant stream of emails from clients that you've shared this app with of opportunities, because people don't sit around doing purchase applications unless they have at least some idea that they might be thinking about buying a house in the future. So again, this is just one of the integrated tools in the BSA. It's right here under BarSmart Mobile. When you actually put this on your phone, you may have noticed this, but it puts in a QR code. So if you're out at a real estate office, I've gotten some pretty neat stories of people that just go around with their phone and have all of the agents scan their QR code. That will immediately take that realtor to your application so that they can put it on their phone. So that's going to be on your phone as well once you set the app up. Okay. So let's see. Gosh, I can't believe we're already at 3 o'clock. So let me see if you have any other questions as to the software itself, presentations, features, etc. As always, as I'm waiting for those to come in, we have our YouTube site. If you're interested in learning more about the software, give us a call, 800-963-1900, extension 1579. Email Scott Remite or Mark Teteris to learn more. about it. Get set up for a free trial if you'd like to take a trial on the platform. And I want to give you a marketing tip today that I think you might enjoy. It's called snipping, and most of you guys may be familiar with this conceptually. All right, but let me show you how this works, because this is a trick that I've used for years, and it can be a very, very powerful tool for you, and you can use it 100 different ways. I'm just going to share with you one idea. Let's say that I am doing a presentation, or I'm doing anything that I want to show. So I got Joe and Sally homeowner here, and maybe on the borrowing page I've done their presentation, and I'm going to be able to save them over 15 years between $73,000 and $113,000, right? That's pretty cool. Now I can send out this whole presentation, but a lot of people don't know that Microsoft has a built-in screen capture tool called Snipper. And to get it, all you do is in the bottom left-hand corner right here, where you click the Start button, and this brings up your Start thing. All I want you to do is type in snipping, S-N-I-P-P-I-N-G. And when you do that, it'll bring up a program right here called Snipping Tool. It's a free program. It's built right in. Most people don't know it's there. And when you do click that tool, that software, it brings it up, and it says, drag your cursor anywhere on the screen to capture. So all I'm going to do is I'm just going to capture this little area right here and let go, and it puts that into a picture for you, and I can save it to my desktop. I can email it. I can annotate it. So it's got a pen right there. So I could sit here and let's just say I got the pen circled. I want to do this, and I want to circle this right here, and maybe I want to point this out right here. I'm going to kind of do a real crude arrow, right? So now I click the, see here it says Send Snip. I just click Send Snip, and it's going to open my default email program, and it puts that picture right in. And I'm going to send that over to my good old friend Angie. I'll send this to myself. I won't make her look at it. Right? And I can go in here and say, I just finished your plan. Really excited to show it to you. Looks like we can have you debt-free in 155 months. Now, when would this be helpful? This is something that maybe you don't want to spill all your candy in the lobby, right? You don't want to give them the whole plan. Maybe it's a suspect more than a prospect, but you know you can save some money. This doesn't tell them exactly what I'm doing or how I'm doing it. You could even just snip the lower portion here, right, with their savings. You could snip a graph or a chart, and you could send it. But what I'm finding is some people are doing is they will take this, right? Now, here's a real cool thing, and then I'm going to wrap this up for you today. Let's say you've created a video for the client, and you know the link for your video. So where does that come from? So I'm going to come back over here and just make sure you know where that came from. So I go to my present page, and this is just another little tip for you. Sorry, now my computer's being slow. Good grief, it's being slow. Why is it being so slow? There we go. It's desk sharing, using the recording, using the audio, all that kind of stuff all at once makes it super slow. Of course, I've never seen it this slow. Come on, there we go. There we go. All right. All right, come on, what's going on? Let me try it one more time. There we go. I just had to jiggle it. Okay, if you've ever done a plan for a client before, this actually timestamps the last plan that we have in the system for you. So if you come back to a client, you want to resend them, you've always got the link right here to their last plan with their video or whatever it is that you did. So if you click that, it will actually take you right into the last plan that you built for that particular client. And it'll give you the link, right? So this link is a link to that plan for the client. So I'm just going to hit Control-C. I'm just copying that link. But here's something you can do if for some of you crazy advanced students out there. So I just finished your plan. Really excited to show it to you. It looks like we can have you debt-free in 155 months. Click the image to watch your presentation, how will I do it? So all I do is I click the image, I right-click the image, and say hyperlink, and it brings up my thing here, and I hit Control V to paste my link in and do OK. I just turn this picture into a live hyperlink to the video presentation I just created for that client. So I could send this to the client now. They get it, click the image. What do you mean? They click the button, and watch what happens when I click this button. Bam, it takes me right to that page that I was on, and I can go through now, and the client can go here and look at their actual presentation. So this is sort of some advanced stuff, but every once in a while I like to challenge you guys to kind of think about how you're presenting. You mentioned financial planners. Well, wouldn't it be cool if you created an ideal presentation of your ideal client presentation, how much money you could save a client, then go in here and snip something like this out of it, make it a link, and send this to financial planners, right? With your signature and whatever else, and say, these are some of the things I do for my clients. I recently saved a client $113,000. Click here to learn more. They click this button, and bam, they're now watching your video over on the web page and learning more about what you can do for them. So just wanted to share that. If you only use the snipping tool, it's not just for BSA, right? It's for anything that you could be doing on your computer at any time. If I'm in here doing a web event and I click the snipping tool and just start bringing it up, see anything that I'm working on, I have the ability to quickly and easily snip. So hopefully that gave you some good ideas, some things you can use in your practice. Again, keep me going, keep me posted, keep me excited. Let me know how you're using the tool, how it's working to help you grow your practice. If your company is looking at this kind of technology or might be interested in it, please also give us a call. Let Scott or Mark and I know that there might be some interest there. We are talking to a lot of corporations that are providing this to their loan officers for free as part of a compliance update. If you're paying for it yourself now, it's no better than free. So let us know. We'll talk to your company directly and see if we can't get them using this across the board. So thanks so much for your time, and have a fantastic day.